Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk to you about how I invest my income on a month-on-month basis. Now, why is that important? Is because if you look at the current market scenario, it is slightly volatile. But if you look at India on a whole, on a holistic view, in the forward-looking era, right? India is very bullish because we're doing a lot of tech advancements, our infrastructure is going, and a lot of money is being pushed into the Indian economy. Now, having said all of this, I am investing my money very wisely in this period because I call it my golden period, because if you invest now, it'll do really well in the future, right? So that is why I'm investing my money every month, and I'm going to tell you my different types of allocation that is there as well. And stay tuned to the end of the video because I'm going to show you where I'm investing that money and which instrument I'm investing my money as well. Okay, so stay tuned. Now the first instrument that I'm investing in, now there's two options here for you guys as well, right? Either there's direct investing or index funds, right? For people who know how to invest directly into stocks, people who know how to find good stocks, direct investing is for you. But for people who don't know, I'll cater to them as well. You can look at index fund investing, right? Now index fund investing is very good. Why? Because if you don't have the time to look at individual stocks, do your research, you have a day job and you can't do all of this, then index funds are very attractive for you, right? So index funds have some advantages, right? Now some of the advantages are that you can directly invest in some large cap indexes, some mid cap indexes, because you don't want to know which stocks are good or which stocks are bad. Also, index fund gives you automatic diversification. So now you're diversifying your funds into different types of stocks and the index is going to manage that. Now, another advantage of this is sometimes actively managed funds have higher fees, whereas passive managed funds, which are index funds, have lower fees. So that also comes as an advantage for you. Now, many times we see that when a stock goes up, right, what happens is fund managers will usually exit their money from that stock and then reallocate that money into some other stock, right? This is what they do normally. But if you look at index funds, index is such a beautiful automated mechanism where what happens is automatically the index will remove and add winners and losers into the index. Now, index is what, if you look at Nifty 50, right, there are top 50 companies of the Indian economy which are stock listed. Now automatically, if one company is not doing well, the Nifty 50 index will automatically rebalance it and remove the stock that is not doing well and add winners. So if you directly invest in, say, a Nifty 50 fund, then automatically you are by design investing in winners that the entire index is maintaining for you. Now these index funds don't have biases, they're completely universal and they're a completely computerized kind of a system, right? So you don't have any biases and no emotional attachment to any of these stocks, which is something that we all need. Now coming to how do you invest in index funds, so what strategy do we allocate here, right? So for index funds, the best thing to do is to invest in an SIP. And why is SIP good? Because in index fund you can get the nice averaging cost as well, and you can keep doing this for a very long period of time. And ideally index funds should be invested and stayed for a long period of time to see the massive benefit that they can avail. Okay, now there are a lot of index funds in the market and you'll be like, Shashank, there are so many funds, where should we invest in, right? Now, if you look at all the different type of index funds that are there, the good ones that I see are Navi Mutual Funds, right? Because Navi Mutual Funds basically have a lot of index funds inside them. So that's really good. Apart from that, they also have a low expense ratio of approximately 0.06%, which obviously adds into your favor if you're doing long-term investing over a long period of time. And what you should do here is also try doing an SIP, and they I think start SIP with 500 rupees as well, so you can start investing in an SIP format as well, right? Now this is where I usually start my SIP and just leave it for a very long term period, and I don't want to look at it at all because the index is automatically rebalancing them as well. So this is my form of passive investing when I start investing in Navi Mutual Fund index funds. Now coming to the second instrument, which is direct stock investing. Now this is for people who already know how to look at stocks, how to analyze all these stocks and try to invest in these stocks. Now again, the time period or the horizon here for direct stock investing should be minimum 5 to 7 years, and you should constantly look at these stocks every quarter to see if fundamentally anything's changed or not, right? Now you can choose a mix. Now in the direct stock investing, there is a mix. There is large cap, mid cap and small cap. Now ideally you should choose what is a perfect mix for you depending on your risk appetite, right? So for me, if you ask me, which is not for you, which is for me, my risk appetite is slightly higher, so I do slightly higher allocation in mid cap. Small cap I don't do a lot of allocation because it's too risky for me right now, but some allocation in large cap, which keeps the balance in the portfolio. But then I do more in mid cap, right? Because mid cap, I want the mid cap to become large cap winners and I start taking positions there, right? Now if you want to simplify this and try to find out what stocks are good, what stocks are bad, here are the few key parameters that you can check. First, you need to check the returns or the sales of the last 3 years, whether it's consistently going up. Then you need to look at something known as operating profit margin, whether it's going going up or not, whether it's maintaining or is it fluctuating, because maintaining is good for us, fluctuating means something's going wrong. How much does raw materials have an impact in this particular company? Is it a commodity based company or not a commodity based company? That is also very important for us. Apart from that, we have some ratios like return on equity, return on capital employed. Don't worry, I've made separate videos for this as well, right? Now you also need to see that whether this company has a lot of loan, because if it has a lot of loan, it is not good for you. And you should see that if they're making healthy cash flows as well, right? Now apart from that, let's look at some of the pros and cons of direct stock investing. Now look at this image, right? The pros of this image are grow with the economy, it stays ahead of inflation, it is easy to buy, they don't need a lot of money to start investing in this liquidity. But the risk is also one that you have to take time to do research, which is a lot of people might not have this. Now there is also taxes on profitable stock sales, emotional ups and downs. How do you manage the winners? Sometimes you'll have losers. How do you manage this? All of these small things obviously will be there with direct stock investing, but this is something that you can do if you have the time to spend and do research. If you don't have the time, then index funds is much better option for you. Now coming to the third instrument that I invest in right now, which is gold. And I've been mentioning this, that I'm a very big believer in investing in gold as well. Now gold is only to hedge my portfolio. The allocation is not a lot. Index funds and stock market investing take up a major chunk of my allocation, whereas gold only takes up 5 to 7.5% of my entire portfolio allocation of my monthly income, right? Now why I prefer gold investing is only for a hedge perspective, because I don't want the volatility to hit me a lot, right? Now even in gold, where one can look at investing is sovereign gold bond, because if you're looking at sovereign gold bond as an investment, it is directly linked to the government. You get a small amount of interest rate, I think 2.5% every year, which is an added bonus. And if you hold till maturity, you also save some money on taxes, because there is some tax benefit. So if you are looking at the gold investing, there's different types of gold investing. One can look at sovereign gold bonds as well. This is only to safeguard yourself with volatility. Now instrument number 4 that I'm doing every month, because I'm a tax paying citizen, I have to start planning my tax exemptions, which is ATC tax exemptions. Now according to ATC, I can do up to 1.5 lakh rupees of tax exemption, but I don't want to sit directly in March and directly invest 1.5 lakhs heavy capital. So what I do is I start an SIP. Now usually in the last few years, I have been doing direct 1.5 lakh investing around March, right? But now why I'm doing an SIP is because the market currently is at a very bottommost point right now, and this is my golden opportunity time to start averaging at a low point. So I have started investing 12,500 rupees every month into ELSS, which adds up to approximately 1.5 lakhs over the entire year. Now some of the benefits and pros and cons of ELSS, for all the people who don't know this, you get up to 1.5 lakhs of tax benefit if you invest in ELSS. But the con here is that up to 3 years you cannot touch that money. It is locked in, you cannot touch that money, you can't do anything with that money. So for people who get very scared of investing, this is, you can't do anything because your money is not going to be touched, right? And the another con or pro, it can be both, right? That it is linked to the market. So if the market is going up, you're again exposing yourself into the market. So if you look at my portfolio right now, index funds, stock market and ELSS are directly market related, and gold is currently non-market related. Now coming to my fifth instrument, right? What is my fifth instrument? Now my fifth instrument is called debt investing. Okay. Now debt investing, again, I'm keeping a small allocation aside, which is approximately 10%. Now debt investing is also known as fixed income investing, where I use two companies and start doing my debt investing there, where I invest in corporate bonds. But again, you have to be very careful while investing in companies or investing in corporate bonds. So please read their credit rating, which is a CRISIL rating or CARE rating that comes out, which talks about the risk profile of a particular company, and only then look at the returns, look at the post-tax returns, and then make an informed choice whether you want to actually invest or not, right? So that is something that you need to figure out as well. And this, depending on that, I do a 10% allocation over there. Again, you can have different allocations. This is my allocation. So guys, that was it. That was the entire video of how I am allocating my money. As you see, most of my allocation is in the stock market with respect to index funds, with respect to ELSS funds, with respect to direct stock investing, which is mostly on the mid cap side. I have started doing more investments into into these gold investing and debt investing to keep fixed income balance as well. Now US stocks are also a part of my direct stock investing, so don't get confused there. Now again guys, I want to make this very clear, right? My risk profile and your risk profile is very different. So if you are investing in the market, you need to figure out your balance, right? If you have a lot of people depending on you, then you cannot take very risky bets like how I can take. So you need to figure out your exact risk profile, and if you don't know, then find a financial advisor and ask him, how do I make a balanced portfolio, and take their advice and then start investing, right? By the way, everything that I mentioned here has a certain amount of risk, so please be careful before investing and do your own research. And again, this is me, Shashank Udupa, signing off. I want you guys to take care and see you soon. Mutual fund investments are subject to market risk. Read all scheme related documents carefully.